212. Check this out, team. So pretty red day for sure for the overall market. We made a video yesterday talking about shorting the market. It's not that, oh my God, like I want the market to crash. Trust me, just like many of you guys, I have money going long on different stocks, right? That I see value in big picture. But guess what? It's very important to understand overbought and oversold levels. And you can see in the comment section, right, from those that refuse to believe that the market corrects itself, but it is literally a fact that the market corrects itself every 2 months. Just look at the past year, right? And I'm not saying that the market's crashing, but that it corrects itself back to the moving average and then it continues to rally. The market's bullish. That's not what we're here to question, right? The market's definitely bullish, but it's very naive for people to think that it's not important to prepare for these pullbacks, right? Because a lot of money can be made by buying the dip and riding the recovery, but not always do you have money left over to buy the dip because you bought up here, right? So it's important to understand overbought and oversold levels and why to prepare at overbought levels to anticipate a slight correction, just like it happens almost every 2 months, right? Every month and a half to every 2 months, it peaks, it pulls back, peaks, it pulls back, peaks, pulls back, peaks, pulls back, peaks, pulls back, and guess what? Guess what happened randomly, right? Oh my God, I must have a crystal ball. I must want the market to drop. No, I'm realistic, right? I look at previous patterns and I anticipate and prepare for these pullbacks. So yeah, these things still hurt, right, when they pull on back, but being in the right position at the right time just makes it a little bit easier. So I ended up increasing my position based off of what I just had yesterday. I only had 1,700 shares, which is about $10,000. I only increased it about $5,000 more. So nothing crazy, right? This is still about a 15% position size. So this is SQQQ. For those that are not familiar with it, you might be asking, how am I in the green when the market's in the red? This is a triple leverage ETF, which of course is not for beginners. But this ETF goes up when the NASDAQ market goes down. And I like to buy into SQQQ when I view the market to be overbought and when I think that the market's going to drop, because I make money as the market drops. And this, again, allows me to make money on both sides. So just be aware of it. Again, if you're an absolute beginner, if you're not the best with position size, if you're not the best with managing your risk, then this ETF is probably not for you. It's too risky. I just wouldn't trade it. But if you're okay with that, if you understand how they work, then look into it and see if it's something that meets your criteria. But what I wanted to share with you guys is, of course, it's definitely unfortunate to see that so much is in the red. But what I like to always remind our Learn Plan Profit members is all we've been talking about is overbought levels and why it's so important to prepare and to make it a little bit easier to tolerate these pullbacks. Trust me, these red days still suck for everyone. But if you think big picture, this is really an opportunity, right? Where when it pulls back to the moving average, as it does almost every 2 months, this allows you to be able to buy at a discount for a lot of tech stocks, because that's what NASDAQ focuses on. Buy them for a cheaper price and then ride them back as they recover. So it's a win-win. How amazing would it be to lock in profits, reduce your position size up here if it makes sense to you, and then as it pulls on back, you can, get into SQQQ, make money as the market drops, and then jump into, all the stocks that you are already invested in, but now you get them at a cheaper price, right? It's understanding how the market works on a consistent aspect. And that's all. It's just being realistic, looking at previous patterns, and understanding this is simply what happens. You can either prepare or you cannot prepare and then be surprised, and when the market pulls back, you're simply a sitting duck sitting on your hands, or I guess whatever it is that you want to call it. But I think it's super important for people to understand, when in doubt, again, it's never a bad idea to simply pull out. So very happy with how we prepared for it. I'm not going to average up into SQQQ super heavy, but I want to do it in a tasteful way that makes sense. So we still got ways to go. We still have that resistance at $6.50. If we break above that, I can always add more into it. But again, SQQQ is a triple leverage ETF, and it does come at a greater form of risk. So if you're an absolute beginner, then maybe this is not the best option for you. So if you guys have any questions whatsoever, feel free to message me down below or message me on Instagram. My only Instagram account is linked in the description. Again, reminder, my only Instagram account. There's so many fake ones out there. is linked in the description. So feel free to message me. And again, we're going to be hosting our live trading session tomorrow at market open. So if you like the way that I trade, if you like the way that I break things down, and you want to join our team and watch me trade live as soon as tomorrow, click the second link down below, learn a little bit more about our Learn Plan Profit 2.0 team, and hopefully we'll see you tomorrow at market open for our live session. Like always, let's make sure that we end the year on a green note. Take it easy, team.